Good morning, everybody. Welcome to the morning brief. Today is Friday, June 2nd, and you know I do the Friday dance. Woohoo! It's Friday. Yeah. So what's going on today? Well, we just had some 8:30 numbers, and that's all we've got. We had average hourly earnings, which came in better or as expected, 0.3%. Non-farm employment change was positive. 193,000 was expected, 339. So the labor market is hopping, continues to be super strong. However, the unemployment rate bumped up just a little bit. I think this is a seasonal thing. It's nothing to be worried about. Heck, we're below 4%. That being said, what does this all mean for the Fed? You know, people have been talking about the Fed pausing in June, and they may well do that, but I think the odds are still this is really strong. I think they're going to continue to raise interest rates, and that's a bad thing, at least for the economy in the short run. So we'll have to wait and see when the overall market sort of gets a clue that, hey, this is way too hot to cool inflation. So it is what it is. We'll be interested to see how that all pans out. The daily chart. So of course the debt ceiling problem has been fixed, at least until 2025, when we have to go through all this bull again. Yes. And we have broken through some trend lines. So I'm going to delete those trend lines. Those are no longer valid as we've broken through them. You can still see the projection here based on the previous run. Geometric projection puts it back up here around 42.82, at least in the short run. Big gap up today. I would be very careful today because this gap up could easily turn into a rout once people realize that there is a chance that not only June, but pretty good chance in July that rates are going to continue to go up because the labor market's just been so hot. So we'll have to wait and see how that is. And guess what? You know, it's this big sigh of relief that the U.S. government is not going to default, at least for another 2 years, until we revisit this again. So it is what it is. What do we have? Where could we go? Well, you can definitely go to that low volume node at 42.64, but we are sort of getting up above that high there. We have to start scrunching it down to go back a ways to find some higher areas on the chart. So we have to scrunch this bad boy down and say, okay, what else do we have here? I do like that 42.87 area. And I also like the 43.10 area, but those are quite a ways away. On the downside, we could easily come back to the top of the bull flag, 42.05. Taking a look at the inventory. Inventory was up yesterday, and I think this was pretty obvious. The markets were up, inventory was up, everything is correlated. When it's correlated, it means the market's doing what it should do. Nothing to write home about here, except that I do believe this was an anticipatory run into the debt ceiling being approved and passing and all that. And the question is now that we have the news, will we sell the news? In other words, buy the rumor, sell the news. That will be what I'll be watching for most of today. Moving over to the intraday chart, where are support and resistance? And you can see here is the big reaction to the unemployment news. So initially down, back up. It's a hard one to say because, again, this could affect the rates for June and July potentially going up because the number of new jobs added was substantially better than expected. So where could we go? All right, so we have this big level of support down here at 42.32. We have some really good support at 42.15 and some more support at 41.95. Those are some major support levels. They look really good. On the top side, where do we have confluence? We have a little bit at 42.65. Some at 42.82, and some at 43.02. I don't know that we're going to go that far, but we'll have to wait and see. Those are the most obvious support and resistance areas. Interesting fact, Stock Traders Almanac today, 76.2. 76.2. Yes, I did a double take too because that is extraordinarily high. Stock Traders Almanac daily bias, 76.2. So very high probability the market will go up based on historical bias. We'll have to wait and see what happens. Again, please like, comment, subscribe. Have a great day. See you Monday. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the TroyLevels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.